time. Okay, we're late by 1 minute, but for some reason it doesn't want to start broadcasting in YouTube. I think it will be now. Okay, that's perfect here, perfect there, and we are good to go. So let's see what we have there. Oh, my brain hurts from hearing about the P capital. Why is that, Jay? Has it been mentioned too much in your opinion? Well, it's a new project which is being started and it needs to be advertised a bit, right? But I'll definitely let Andrew know that it's too much. Perfect. So let's see what we have here. Hey Daniel, how are you doing? So Ivan traded PTO and I love this. I'm regretting exiting my PTO trade. Since you shared PTO trade, I'll show you my PTO trade after we're done here. So indicators, it's gapping up above a daily breakout level. I'll show you the daily chart after we are done with reviewing this trade, but it was at all-time high. We had only the pre-market high on our way, which is here or maybe there. Pull back, multiple supports, and those multiple supports are moving average. It's view up. It's the pre-market high and the pre-market pivot point. So it's pulling back into a bunch of supports right there. You entered for a 5-minute open range break. This is actually perfect. I didn't pay attention to 5-minute chart before, but thank you for mentioning this. You're having an ABCD pattern on the 1-minute chart with an opening range breakout on the 5-minute chart, along with a good gap up to all-time high and literally no resistance ahead of you. So this entry here, it was perfect. And instead of me exiting this trade, I should have actually added right there. So you are getting into your position and you're exiting all out at 2 hours. Now one thing though, if you're exiting at 2 to 1 all or nothing all of the time, then yes, this was a really good exit right there. If not, I would have just held on to this one for a little bit more of a run, because the only resistance you had ahead of you is the resistance at 96. After it's breaking $96, you'll have nothing ahead of you except for the round numbers 97, 98, 99. Those are the only possible resistance areas right there. When you are getting into a stock with a really good entry like that and really tight stop loss, you would want to make a bigger winner out of that. Yeah, Python, Daniel, that's why I actually like this one. Let me actually show you my Python trade as well. Python. So this is the trade I have taken today, and I started accumulating my position in the pre-market. So look at this. This is my A plus opinion range breakout, and I talked about this one on my recaps on YouTube. I actually did two recaps talking about the same thing. So if you guys didn't hear about them yet, you can go to YouTube, open my playlist, and watch the last recaps. This is my favorite breakout pattern. I love to see a stock at a breakout area on the daily chart, and here you see that today it gapped up, and that was it today. It was at all-time high. After all-time high, what do we have ahead of us? We're having the pre-market high. Pre-market high. Above pre-market high, literally nothing. So if it's breaking up, it could run a lot, and that's what I liked about it. I get used to stocks making huge moves in the pre-market before the market opens. They just break out last few minutes before the market open and then running, and I didn't want that to happen in PTON. So what did I do? I took my entry right there. Now guys, tell me, what was my stop loss and why did I put it there? I bet you can figure where my stop loss was. I usually mention it. View up, No, not VWAP. VWAP isn't a technical level in this case. Looking at this, VWAP is being chopped around. So VWAP is definitely bad stop loss in this case. The moving average, the range. Yeah, Bitang, Kevin, Lenny, Lou, 9350, Sam, Jay. Yeah, perfect. Those are all correct answers. So what was my entry? My entry was within the range. And if we just zoom it out and we draw a range, you will have the low of the range somewhere here or somewhere here. Both would work out. The high of the range is here. Now, because this was only one time wick, I didn't use it. If we had it wicked down one more time to 92.50, then definitely I would have used 92.50, like Jay said. Because it was only one breakdown right there, and I'm getting within the range. Remember, if you are getting in within the range, your stop loss should be the low of the range. Why is that? Because I can't really expect it to break out right after my entry. It could pull back, which it did, to the technical level, bounce off of it, and then break up. And that's why I used the low of the range as my stop loss. At the open, what do we have? We're having a good opening candle, 1 minute candle. Next candle, it's having a hammer, a really good candle, and now I'm getting in for a 2 minute opening range breakout. I basically move my stop loss somewhere down here, a little bit below the hammer, and I'm getting in heavily up there, partialing at 93.70, 95.80. Why did I partial there? No daily levels, nothing right there, only because I started hitting the 5 hours. I just started to take my partials right there. Moved the rest of my position to break even. Now that was my mistake, moving it to break even. And if you see, this is the pre-market high, and the previous resistance acted as support. And this is something we talk about on each review right there, or on each trade review session. Usually stocks after a breakout, what do? They either break up, or they break up and then pull back to the previous resistance, act as support, and then continue going higher, or maybe they'll just pull back above the resistance area. I knew that this might happen, but I didn't want to give any profits back, not even a few dollars, and because of that, I missed this move, which Ivan actually caught. So good trade right then, Ivan. Yes, I moved the stop loss, and my stop loss somewhere around 94.50. Not the best stop loss, but after a stock is breaking up, it has literally no resistance above it, and I'm not getting in inside the range, I'm getting in at the break of the range. I could just tighten my stop loss, anticipating a huge move right there. It's something I did today on NKLA. Look at this. What do we have here? A daily level, right? Which is a pre-market low. What do? I take it to the short side. I add to my position after the breakout of this point right here. We're having only 1 point on our way, and I'm not having my stop loss at technical level, because once we're breaking this level, it will not look back. It will just flash down, and then I could just start taking quick partials. This is type of momentum play, not only open range breakout or a technical play. If I get in here and then it just starts going against me just a little bit, I would bail on the trade, because the momentum play didn't work out. I was short by Zenith since the pre-market. Unfortunately, it triggered my stop loss. It came back down, and that was a fake breakout right there. Looking at the fake breakout, it already tried to go up, but it failed, and now it's coming back down. I could just tighten my stop loss. If it just started going down without this move to the upper side at the beginning, I wouldn't have had these type of tight stop losses. The only times where I would put a tight stop loss within the candle is if I see that it's starting to go against me, and then it starts to go into the original direction of my trading plan. So yeah, that's it quickly, and let's see what else we have there. B-Tank. Ivan, I'll get to your next trade if we have time there. Now B-Tank traded mRNA. Let's see what you traded there. You traded a parabolic reversal on mRNA. It had 4 consecutive candles on the 5-minute chart. It was extended from the 9 moving average on the 5-minute chart, and the volume bars are above the average. Your entry was on an engulfing candle on the 1-minute chart, and you entered on a new 1-minute low. Exited at 4 to 1. Did you get 4 to 1? I think you didn't get 4 to 1, because the actual was break even, yeah. Now let's see what you had right there. Let's go through bigger time frames. Do you have daily chart? We don't have daily chart. You see the 15-minute chart, it's just going straight up, but we don't care about the 15-minute chart. What do we see on the 5-minute chart? 1, 2, 3, 4. 4 consecutive candles with the stock being extended from the 9 moving average on the 5-minute chart. On the 2-minute chart, little bit late entry. Usually stocks, if they fail going to the 9 moving average on the 5-minute chart, they bounce off the 9 moving average on the 2-minute chart. So I avoid taking my entries closer to the 9 moving average on the 2-minute chart. Let's see what we had on the 1-minute chart. On the 1-minute chart, we had sort of an engulfing candle, which I don't love seeing a lot. I prefer seeing a reversal candle up there so that I can get an early entry before the 9 moving average on the 1-minute chart. And then if it goes against me, I could exit at break even. Was it a bad setup? No, it wasn't a bad setup. You had it extended from the 9 moving average on the 5-minute chart. You had the new 1-minute low. Unfortunately, it's not the first new 1-minute low, so you are going against the pivot point, right? Which could act as a support and then continue going higher up there. Now, let's see that. You're getting after this reversal candle, tightening your stop loss around this candle and getting stopped out. I used to do this when I see a reverse hammer after the red candle and then a breakout, but still it doesn't work enough, so I just stick to the reversal candle at the high of the day or the reversal candle at the low of the day. But still wasn't a bad setup. It was decent trade there. Ivan, you had a question about your Python trade. Let's see. So question, would you have waited for a new 1-minute high before entering, or is the 5-minute high sufficient? So here when you are trading this setup, you are taking a 5-minute open range breakout, right? You are not trading an ABCD pattern on the 1-minute chart. If you are trading the ABCD pattern, then definitely you would want to see a new 1-minute high. If you are trading a 5-minute open range breakout, seeing a new 5-minute high is enough, along with the confirmation on the 1-minute chart. And you see that it's bouncing one time from the pre-market level. It's bouncing a second time from the pre-market level right there. And you are getting in as close as possible to the support. One thing which I would have done if I traded PTON, I would have added here at this breakout. I would have tripled my position. I double it, my average will be here. I triple it, my average will be here. If it goes against me after the breakout, I'll exit at a small loss or at break even. If it breaks like this, even this move right here, with a triple position, 3R, you will get around 9R move in this small move right there. So yeah, one thing, trading this open range breakout, knowing how I trade, I would have added at the break. Now let's see DH pack. When I add, I just move my stop loss. If you got an early entry, sorry about that guys. Look at this, this is your entry. This is your stop loss. Your stop loss, let's say $50 here, right? Now, let's say you are in with 100 shares. Just assume that 100 shares. Now, you want to enter at 96. The distance between 95, 20, let's say it's 20 and not 17, and 96 is 80 cents, right? If you double your position and you have 200 shares, what will be the average? The average will be half of this way right here. You don't even need to know math to know how to add. It's just a trick I usually use. So I'll have 200 shares with an average of 95.60. So I'm entering here, adding to my position here. My average is 95.60. I'll still be profitable in the trade. If it goes all the way to 95.60, I will be at break even. And knowing that this is too much, and I definitely wouldn't hold all the way down there if it just gets back into the range after the breakout, I could double my position again. Now look at this, 96 and 95.60, 40 cents. If I double my position one more time, I'll have 400 shares with an average of between 95.60 and 96, 95.80. I'll have 400 shares at 95 with an average of 95.80. So you see, instead of having 100 shares, you could have 400 shares with your break even sitting at 95.80. And with those 400 shares, if you get that decent move, let's see this distance right here. It's around, yeah, this is around 40 cents. So basically you could have 100 shares with $40 risk. But let's say it's not 40, it's $50 risk. Now, if you have 400 shares at 95.80 and you go to 96.80, how much will you be up? You will be up $400. Risking what? Risking nothing. If it goes to 95.80, you'll be at break even, right? If it goes to 95.70, you'll be down $40. So basically, you'll be up 8 hours only because you got an early entry. It depends. Sometimes they move it to break even, sometimes not. Sometimes I would add all the way up here, and if it goes a little bit against me, but you don't want to add too much. You don't want your break even to be the place where you add, because you'll be in so heavy. Let's say you're up 400 shares, and now your break even is the place where you added, which is 96. If it goes to 96.80, only 20 cents, and it could do that. Just drop so fast to 96.80, right? You will be down $80, which is more than 1 hour. So basically I just add, so my average becomes below my new ad, and if it goes a little bit below that, I would exit for a small loss. Does that make sense? Perfect. So DHPAC traded Microsoft, traded it to the long side and to the short side, and I love both of them actually. So to the long side it was a scalp play, and I bet you had a really tight stop loss, right, in this one. I could understand why you had a tight stop loss in this one. You took the setup based on the 5-minute chart, right? I'm not sure if DHPAC is there or not, but anyway, you see Microsoft, it did 3 or 4 consecutive 5-minute candles, right? It's bouncing off a horizontal moving average, and it's making a new 5-minute high. And knowing how the stocks trade, they could pull back to the 9 moving average in the 5-minute chart and then continue dropping down. Since this is on the 5-minute chart, I would expect it to go more than the 9 moving average in the 5-minute chart. So basically, this entry with a tight stop loss, new 1-minute low, could have been enough right there. You don't put your stop loss within the candle. Unfortunately, the 1-minute candle is not really clear, but you could see that you could really tighten your stop loss. You could put it at a new 1-minute low. If it makes a new 1-minute low, it could go all the way down there and make a double bottom with the second bottom higher than the first one, and you definitely wouldn't want to hold it all the way down there, right? It's better to just get stopped out once, and if it's doing this pattern right here, you could re-enter with a tight stop loss. So what you did here is smart. You're waiting for a new 5-minute high, and you're getting your entry based on the 1-minute chart and your stop loss based on the 1-minute chart. That's your stop loss. Was it that? And then, yeah, that was it, yeah, because that's what I would have done there. And that's your reward, which is decent, almost 2-to-1 or 2-to-1 if not more than that. Now look at these guys. What do we have? We see that Microsoft is more weak than strong intraday, right? So basically we're still short buys. It's coming back up, and we wouldn't take it to the long side anywhere here. We would want to have sort of a W shape before we make sure that it's a long. And I prefer seeing a higher high and a higher low wave. So we are having a high, you're having a low, you're having a high, you're having a low, then you're having a low. So basically, yes, you're having higher lows, but still no higher high. As long as I don't have a higher high, I'm not long biased on the setup, and I would be long biased on it only if it makes a new high right here. That would be my entry. Sorry. If it makes a new high or higher high along with a higher low, that would be my first entry, and then I would wait for another wave to add to my position right there. Looking at what it did right here, it never did that. It actually formed an M shape, which we love seeing on a reverse ABCD pattern. You waited for a new 5-minute low. The 15-minute chart was clearly bearish, right? You see those wicks on the upper side of the 15-minute chart. Look at the 30-minute chart. It's even more bearish on the 30-minute chart. Reverse hammer right there. Daily chart was bullish, and on the 2-minute chart, it's breaking this pivot point. So the next target after this pivot point is this one right here, which it held a little bit. Why did it hold right here? Any idea? I mean, it's not a rule or like 100 reason for it to be holding there, but it's just something which I think caused it to get some support right there. Why would it start having or getting heavier there? It's the low of the day if it's a pivot point. And what are traders going to do around that area? Because it would have been something I would have done if I was in that position. Exactly, Lenny. If you are short here with that good of entry, or there, or maybe even there, you would want to take partial closer to the pivot point, because it might make a double bottom and then reverse, and you don't want to be in that position. So what would you do? You would take some partials. People or counter traders who want to make a little bit of scalping, they would go in once it's finding some resistance, once they see that on the time and sales on the level 2 there is an increasing action down here around this area, which means that people are starting to cover around this area. They will step in and buy it at that area for a quick scalp closer to the 9 moving average on the 1 minute chart. Now the stock is more weak than it's strong, so definitely it's not a reversal, it's just a pullback which we would hold against. And then at the break, what could we do? We could add to our position and move our stop loss to the level it bounced from, or a new 1 minute high, because this is a breakout area, and then just go for a quick scalp to the downside. So yeah, that both trades were really good. One thing though, early partials, right? You got a really good entry on this setup, and you partialed not even at the pivot point, right? The closest pivot point is down here. I mean, at least the previous day close. Other than that, you traded really well. Good job. You'll definitely work on that. It comes with time, but we need to practice, right? Heezer, let's see what you did. Heezer has been killing it. So traded PNN, and I bet as usual your entry was based on the time and sales on the level 2, right? Yeah, exactly. So looking at this, always time and sales on level 2, that's good. I mean, I don't trade a lot based on the time and sales on level 2, but you're developing a good habit right there. So you see that it did sort of an ABCD pattern. It broke up. After the breakout, it's pulling back to the previous resistance, which we love to see for a trend continuation. It's trying to break up, it's getting heavier, and it can't really break the high. Heezer sees that the price action is getting heavier right there, along with confirmations on the time and sale and the level 2. So with the pattern, that's enough, but seeing this alone with the pattern is not enough to take a trade. For me to take a trade, I would want to see at least this right here. This pivot point being broken, and I would take it to the short side there and have my stop loss. This pivot point being broken, I would take it to the short side here and have my stop loss somewhere up there. Then this is being broken, I would add to my position. Then this being broken, I would add to my position. So basically at the break of pivot points, I would usually add to my positions. Instead of waiting for that all, he sees signal on the level 2 and the time and sales and taking it to the short side. No partial, because there is no need to partial, right? It's weak for him. Adding on an M shape, but I bet that definitely wasn't the reason for his add. And this partial was smart. You are partialing at the sloping up to 100 moving average right there. So yeah, this is definitely amazing partial. Another partial at the daily level. Look at these guys. All partials Heezer's taken are because there is a reason for taking them. Moving average, daily level, another moving average, starting to get heavy, breaking a pivot point along with a new 5-minute high. And this full exit, what was your reason to exit this one? Yeah, Charlie, this M shape definitely would have been a good one to get an entry, and if I was watching, this would be a really good reverse ABCD pattern. So you're exiting here because of the double bottom. Now, everything there was amazing. The last exit, I would have still held on to this one. When would I have exited? Maybe the same place, but here, not here. Why is that? If a stock is getting closer to the low of the day, it doesn't mean that the pattern is double bottom yet. if the stock is getting to the low of the day and then it's holding it and bouncing out of it, then that's a double bottom, and you might want to be a little bit concerned. If there is another reason, big print. Okay, so there was another reason for him, big print at this level, so he exited right there. Now another reason, except for the double bottom, because it didn't do a double bottom right there, was the fake breakdown. Fake breakdown, engulfing, fake reverse ABCD pattern, and then a hammer. Still a good place to exit at a new 5-minute high. Really good trade there, Kaiser. Hey Peter, how was your day today? Max loss overtraded. Yeah, that's sad to hear. You definitely need to stick to those 3 trades. Yeah, you were supposed to have only 3 trades, right? And how were your first 3 trades? So let's see, Klaus. What did you do? You traded ITCI. This is not from today, right? Because I saw this one yesterday, or it was from today. Yeah, it's yesterday. I see that. Anyway, look at these guys. This is decent. I like this one. You see that it's holding a support. Definitely not enough, no clear direction here. So you could take this one either to the short side, either to the long side. Both directions would have been good. If you want to take it to the short side, you try to go into the as close as possible to the resistance. If you want to go to the long side, you might want to go as close as possible to the support. So Klaus wants to go to the long side, so he's getting it as close as possible to the support, partialing as close as possible to the resistance. It's making a higher low wave where he adds to his position and then partials at the breakout. You missed a really good move right there. Your entry was really good, and personally I would have held on right there. And guys, why was would you guys hold here, and what would be the reason to hold on after a breakout? Look at this. Clear range. Clear range, which was holding for around an hour, right? And finally, after an hour, it's breaking this range. After this, I bet a lot of shorts got stopped out, and maybe a lot of longs are starting to step in. Now, after a breakout, what do we usually see? We could see that the previous resistance is acting as support, and then a trend just continues. This is happening a lot. This happened today on PTON, but the same thing, I chickened out and I exited because it was my break even. And this happened ITCI, and this happens on a lot of other stocks. Once the stock is breaking a resistance, it could always give you, not always, a lot of times it could give you a good place to re-enter. So yeah, that's why I would have held on to this one. And at the breakout, I would have added to my position and moved my stop loss somewhere right there or somewhere up there. Am I taking 2 partials? It depends on your risk to reward. I can't really tell what's too much, depending on how much you're partialing. If your partial is 10% or 15%, that's not too much partials. If it's 30% or 25%, still depends. I mean, 1 partial, 2nd partial, 3rd partial. Depends on your risk to reward and your share size. If you hit around 3 hours here, let's say 3 hours or 4 hours, and you're taking only 25% out of 4 hours, you're locking in only 1 hour and you still have 3 hours unrealized. And 3 hours unrealized is a little bit too much, right? You don't want to have 3 hours going all the way down to your break even. So you might want to lock in at least another hour or 2 hours right there. And having only 1 hour unrealized or 2 hours unrealized. So it depends on your unrealized. If you have only 1 hour here unrealized and you are taking 2 or 3 partials, then yes, that's too much. So let me show you. Let me actually do this. Yeah, I'll show you. Let me just switch my account to simulator before I do something stupid. Okay, I'm in simulator now. Okay, let me just take 1 share. I'll buy 1 share or 5 shares or anything like that. Just that thing. So look, I'm getting into the long side here, and actually I didn't use a hotkey because of which I don't have a stop loss. Anyway, let's have a stop loss quickly at 38.90. Limit, and I'll use 38.90 as my stop loss. 38.90 and 38.90. What I could use right there is this chart area, config area, and enable order and entry line movement. So you could just move your stop loss this way. You don't need to have a hotkey to move it. Why do I have two of them? That's stupid. Anyway, I think I just made the wrong hotkey or clicked the wrong hotkey. But yeah, what you could do is just move it here and there. That's enough. Anyway, let's just bail on this trade. Simulator. So Charles, let's see what you did there. Charles traded OSTK. Charles, walk me through your thought process. Why did you take OSTK to the long side? Here and here. I have an idea why you did that, because I was watching OSTK as well. Hey Joe. So OSTK was also at all-time high today, right guys? And this is the pivot point we have on our way here, and then we're having the pre-market high up there. This was 77.50, somewhere around 77.50. So Charles' first entry, it was at the break of this pivot point up here, and after the break he will have literally nothing ahead of him except for this level right here, which it went to, right? So you're taking your entry here, and if I had taken my entry right here, I would definitely consider taking partial up there for the breakout. When I'm going in for the breakout, I don't use the low as my stop loss. I just tighten my stop loss, maybe half of the candle, and take partial at the possible resistance area. It doesn't do that. It's going against you, getting you stopped out at the low of the pivot point, which is sad, but still doesn't mean that the setup failed. You see that it's respecting this. It's making sort of a double bottom on the 1 minute chart, making a new 1 minute high, and this is really smart. Remember guys, what's the end of the pullback? The end of the pullback is at least the moment the stock makes a new high. You don't want to go into the long side on this candle, on the red candle, only because it's touching a moving average, because the next candle could be another lower low and lower high. Waiting for a new high was really smart. You also have a defined stop loss, the level from which the stock bounced from, and that was really nice patience. You waited for the break, another partial, and this exit was also smart. I like it so much. Let me zoom it in. You see that the stock is starting to get heavy here. You're having a shooting star at the high of the day, red candle, double wicks. All this isn't scaring him yet, because this previous resistance area is acting as support so far. The moment it broke, he knew that now it's going to get into the range, and the next pivot point we're having either right there or either right here, and he doesn't want to give this profit back. So what's he doing? He's just exiting right there, adding to the position up there, which I wouldn't have done. Why is that? After a huge drop like this, first new high isn't enough. At least a W shape, right? Or at least a double bottom. Now it's going back up. It's still not the worst entry. Why is that? Because it's making low, high, low, higher low. And as long as it's making higher low, it's still not bad. It's still decent. But I would prefer seeing a higher low and a higher high. Now look at this. It's breaking this pivot point right here. It's breaking down, not making it to the previous pivot point, getting back into the range. So if you are interested in taking it to the long side, you could always take it at the break of the pivot point and then add at the pullback right here. But yeah, this was good. I like how you managed this trade. Peter, let's see your trade. You traded pen. ABCD pattern, Peter. Let me get back to the chat. It's not looking so bad. It's not looking perfect as well. Yeah, it's not bad. It just made a double top with the second top out in the first one. Huge move right there. Pulling back. Good candles for the long side. Making higher low wave. Another higher low wave. Pulling back. You're getting a good entry right there. I wouldn't have had this type of stop loss. I think I would have used this as my stop loss. Or that as my stop loss. I would have been stopped out anyway. But I would have used that as my stop loss. It just didn't work out. Yeah, I think it wasn't bad. Hello, Ayer. Yeah, because the pullback was good. It was a 50% pullback. Really good candles right there. Really good waves right here. So it's trying to break out, but then it's just dropping down, which is unfortunate. I don't think this was a bad setup. Charlie. Let's see what you did. Trade DKNG. Now look at this. This is similar, right? But this is actually type 2 on ABCD pattern because the pullback is not climactic, or it's not forcing itself for a drop. It's just dropping slowly. It's not an ABCD pattern though. It's sort of a double bottom above a strong support. You're really patient about this one. You're waiting for it to break the pivot point, taking it to the long side one time, and it's getting you stopped out. And this was a fake breakdown. It's annoying and I hate it when that happens, but I like how you re-entered. Your setup still didn't fail. It came back up. You're having your stop loss at 42. Entry 42.20, which is 20 cents. First partial at 3 hours, right? First partial 3 hours, second partial 5 hours, 6, 7, 8, and 10. And you got around 4 to 6 hours average. How much are you partialing every time? 10%, 10%. Those were 50%, right? The rest, 10%. Yeah, so I guess it was around 4 hours average eventually because of those big partials here. Because of those two big partials here. Because when you are in 100%, then you are partialing 50%, you are left with 50% here. Another 50% partial, you are left with 25%, which is quarter of your position. Few 10% and you are down to around 10% left for your position, or 15% left for your position. But yeah, 25% remaining actually is not bad. I mean, you were patient with that. 25%. This is in simulator. It's okay. Whether it's simulator, whether it's live, you are practicing a good thing. You really were patient about it. Just one advice: if you are going to be working on 10 trades, no 10 trades. If you are going to be working on 10 trades, work on ads at the same time. You are holding here because you believe that this is a pullback. And this is an ABCD pattern type 2, where it's not forcing itself to the 9-moving average on the 2-minute chart, but it's slowly dropping down, right? So it's the 2-minute chart. Here is the 5-minute chart, here is the 9 and the 5-minute chart, and we know that the stock is usually pulling back to the 9-moving average in the 5-minute chart. Actually, what am I doing? This is the 1, this is the 2, this is the 5. Yeah, this would have been wouldn't have been a bad place to add, and I think that would have been the only thing. Double dodges at the high and the breakout, and then a breakout of the pivot point here and here. I think that at 11.54, 11.55 and 11.50, somewhere around there, it wouldn't have been a bad place to add. JC traded beyond. Now this is not bad as well. Stock is making a huge move up. It's making an engulfing, and after the engulfing, you see that it's clearly holding a support and it's not breaking down. Double candles, which are good for the upper side. Why is that? Because they have bigger lower wicks. New 1-minute high. Tight stop loss. You are getting into the long side as close as possible to the support. You are also having view up as a support, and view up was a technical level in this case because it was holding the price. partialing at the high of the day and then at the breakout. I would have held for the breakout for the first partial. This exit here, I would have also held on through this one because the previous resistance could act as support. This is happening a lot of times. If it's breaking it by a couple of cents, just don't worry about it. Those support and resistance areas, they're not always exact levels. They could wick a little bit below them, which is normal. When you are having a fake breakout though, and then a huge drop like that, you would want to bail. So yeah, you would have exited at the same place, but a little bit later. Charlie said something about OSTK short. I mean, I also had a short later on that STK trade. Where was that short? Or when exactly did you short it? Is it here or like later in the day? On the image 30 minutes later. Let me take a look there. Wrong chart. Thank you, Charlie. Let's get back there. So this is a short there, right? Okay, I didn't pay attention to this one, so thank you, Charles. So that was a short there. I like that short. You're having a pivot point, which was a resistance before, acted as a support, but then it just stopped holding and it started forming a descending triangle against there. So it's breaking that pivot point right here. That's it. It broke it. And you're not rushing it. You're not entering right at the breakout. You're waiting for a pullback for that one which acted as a support here to act as a resistance. And on a new low, you are taking it to the short side. So this was amazing short. And I think in this case, I usually go for these highs as my stop loss. You don't need to have really high stop loss up there. And then that was really good patience. I love how much you held on to this one. Pivot point there. Another pivot point there for a partial. Another one for a partial. That was really smart. Dell traded pen, and that was a reversal, right? So this one looks like a parabolic reversal to me. It wasn't. It was decently parabolic, not so much, but yeah. 2 candles, $1.50 move right there. So 10% would be around $6.50, and yeah, this was around 2%. Yeah, around 2% or 1.5%. Anyway, increasing volume at the high of the day, and an increasing volume or climactic volume is a reversal indicator. I definitely don't love taking reversals after engulfings, and my main reason is that the risk to reward will get messed up, but you have that's not a must, right? You could take it below those after engulfing candles. It's just me, I don't prefer them because of the risk to reward. You had a daily level on the way, you had an increasing volume, you had a stock which was parabolic and far from the non-moving average in the 5-minute chart, and you had a new 1-minute low. So everything you need to take this trade was actually there. Survived the pullback, which is good. And then you are exiting all out once it made a new 5-minute high. So I wouldn't have exited the moment it made a new 5-minute high. You were really patient. First of all, one thing I would have done, I would have definitely taken a partial at the 9 on the 5-minute chart if it went there, or if it gave you the risk to reward. But still, I like your patience. I would have taken another partial at the low of this pivot point, because it could just hold on to this one. This is the neckline. This is the beginning of the neckline. So you're having a shoulder, a head, neckline, right? And now this right here, it doesn't mean that the stock is making an ABCD pattern or a stock is going to break up. Only having a new 5-minute high is not enough. We need to anticipate what patterns might come few minutes later. You don't need to trade them, but seeing the price action a lot, or watching the price action for a lot of time, you could just anticipate what might happen. And you could anticipate, tell yourself that a new high doesn't necessarily mean that the stock is going to go to the upper side. This new high could actually be forming a reverse ABCD pattern or a head and shoulders pattern, and the break of the neckline could be actually a good place to add, or then finally take partials because you already held on a lot to this trade. Yeah, Kevin, exactly. This was a really good head and shoulders. But good patience there. They'll traded PTON to the long side, and this is the same one we saw Ivan traded. So yeah, same thing. 5-minute open range breakout with an ABCD pattern on the 1-minute chart, getting as close as possible to the support, waiting for the breakout to take partials, and then you are adding here where I wouldn't have added. Why is that? Look at the 5-minute chart. The 5-minute chart is ugly. You are having a shooting star at the high of the day. You are also having sort of head and shoulders forming on the 1-minute chart, and you're having a clear neckline right there. So a new 1-minute high isn't necessarily meaning the stock is going to shoot up. It could just form head and shoulders and drop down. When would I like it? I would like to see a W shape for it to break up, or I would want to see it breaking the neckline, making a fake breakdown, and then coming back up for me to be interested in taking it to the long side. And a lot of times found that the distance on the chart does not translate properly on my PNL. For the first CCL trade, looks good on the chart. However, when I look at my PNL, I only got 1 R because of slippage. Don't use the chart to calculate your entries and your exits if it's not so clear, because I see it's having, you're having 97 and 97.50, and there is like 50 cents in between, and when it's not really clear, your entry could be not literally at 97, it could be 97.30, 97.25, right? Check the average price for your entry on your open trades and look at your stop loss on the orders. Then base your target based on what you see on the average price of your entry and that stop loss. Lenny also Lenny traded this one amazingly well. Lenny actually traded this one way better than me. You are taking it to the long side at the break of the high of the pre-market. You don't care about this pullback because you know that the previous resistance could act as a support. You add to your position and you make a whole move right there. Now that was amazing. Just look at how Lenny executed this trade and how poorly I did execute this trade. Let's close this. And that's my PTON trade. That's my PTON trade. I'm getting my entry, I'm getting my partials, exiting the reset break even. Lenny is getting his entry, he doesn't care about partials because it's all-time high, he's waiting for it to go to the previous resistance, adding to his position when I actually exit the trade. And that's it, he got the move. That was amazing, Lenny, good job. So yeah guys, do you have any questions? Guys on YouTube, do you have any questions? No questions? Then please, where can I learn about the impact of spread when taking a trade? I hear a lot about spread and how important it is to look at the spread level too. So, remember that if you are going to take stock to the, going to take trade to the long side, you are going to get filled on the ask price. If you are going to take it to the short side, you are going to get filled on the bid price. Let's say that the ask now on PTON at 19, what enter is it? 1993. Okay, I see that. And the bid was at 90.81. So that's what I saw on my montage. If you are going to get to the long side, that's where you are going to get filled at. You are getting filled 100 shares at 19.93. If you want to sell at the same time you bought it, you will get sold at 90.81, which is 12 cent spread, which means you are down $12 the moment you enter the trade. Now, if you take 1,000 shares to the long side, you will be down $120 right when you enter because of the spread. Yeah, that's assuming you want to sell. But look, you are entering at 1993 and now assume that it's not going in your favor immediately. Assume that it's starting to drop. So it's going to 1980. here it will be at 90.70. So you started the trade being down $120, and now that it's going against you, you're down $220. That's because of the spread. So you are down a lot even at the moment of initiating your trade. Because of which you definitely need to put that into account. Your spread and your stop loss should also add to each other. I have limit orders, and usually if you want to sell, to buy, you buy with at the ask, and you sell at the bid. Sorry, yeah, it's actually that. Yeah, it's actually that. I buy on the ask and sell on the bid. If you want to get instant fills. Yeah, that's it. If you want to sell on the ask, it will take so much time. Narkal, do you do this review daily? No, we are not doing it daily. We are doing it each Tuesday and Thursday, 12 p.m. Eastern. And R is the amount you are risking per trade. So R, for some people it could be 1%. For some people it could be $50. For some people it could be $100. For some it could be $5. It's just depending on how much you are risking. Each trader is risking a certain amount of money. We don't risk the same amount of money every time, right? Or not all the traders are risking the same amount of money per trade. So it's easier to talk about it in terms of Rs. Man, a stock like WKHS is really whippy. How would you trade it based on the range and levels? What I mean by whippy is the spread is all over the place. So let me take a look at WKHS quickly first. Let me scroll it forward. So looking at WKHS, the spread is 3 cents. It's not so much, right? Looking at the price action though, it gapped up, which is making me long bias a bit on it. The waves are not so clear on the 5-minute chart, so definitely I'm not going to get my trades based on the 5-minute chart waves. I'm going to pay attention more to the 15-minute chart waves. On the 15-minute chart, I see that it's more weak than it's strong. Based on that, I'll keep an eye on the 5-minute charts waves now. And if I want to take it to the short side here, my stop loss will be the high of the wave up there. 23.54. If it's going to break this pivot point here at 23.13, I would add to my position and move my stop loss to 23.38. So basically this is what I'm going to do. If I want to take this thing to the short side and I'm really short bias on this one, I would take it to the short here. I would put my stop loss 23.60, which is 30 cents. Then the moment it's breaking 23.13, I would add to my position and I'd move my stop loss to the level it actually bounced from. What's my target? My target would be 23 or this pivot point. And then it would be 22.63. I'm not long biased on this one. Yeah, I have a record of the trade review session every time we're doing it, and it will be on YouTube. It's actually on YouTube right now. I mean, with the moment I stop the trade review, it's uploaded to YouTube. Alright guys, so have a good day everyone. I'll be in the chat room. If you guys have any questions, feel free to email me, ayman@beerbulltraders.com. Guys on YouTube as well, if you have any questions, email me at ayman@beerbulltraders.com. Trade safe, don't overtrade, respect your rules, and bye bye.